We're loving this one. It's a contender for our best video question yet. It comes from Tobin and Gwen in Comox, BC. The subject is Cineplex. Let's roll it.
Hi, my name's Tobin. And my name's Gwen. We live in Comox, BC. We love Star Wars. It's the Force with Cineplex. Would Cineplex be a good company to invest in? Thanks.
Goodness, super cute. May the Force be with you guys as well.
We'd like to have lots of questions like that.
Oh my gosh, maybe we'll say all questions have to be video questions from now on, featuring Star Wars characters.
Good plan.
Okay, Cineplex.
So Cineplex as a company's done a great job of executing. Of course, it's been a very good year with things like Star Wars. The lineup has been very good for them. So it might be a little bit tougher next year. But they've done a great job in growing their margins over time. They've done a great job in executing. The stock has consolidated over the last year, traded sideways, and just recently made a new high. I think it looks like the stock's ready to lift. There's a great dividend, and they've been good at growing the dividend over time. So I'd have no problem owning the stock. We don't own it currently, but I'd have no problem owning it.
If we put up, say, a 10-year chart, you're not worried that a lot of the buyers are already in these shares?
Look, there's a number of different themes in this market, right? And one of the themes is yield, very clearly. People looking for income replacement from things that aren't bonds or bond-like.
Right.
And so, look, Cineplex is somewhat economically sensitive. It pays a very good yield. It's going to be a steady grower over time. You know, that they've done a great job in optimizing their business so far, but they should continue to execute well.
A yield of 3.1%. Jerry is in Vancouver. Go ahead, Jerry, please.
Good morning, gentlemen. David, like that tie of yours. Love the color.
Yeah, it's amazing, actually.
David, can you please give me your view on Magna? I'm looking at buying into it, but do you think there will be more downside on it yet? And what do you see happening with it the next year or two in terms of growth?
Okay.
Thanks very much. Andy, can you give us the street consensus, please?
I sure could, yeah.
Okay.
Thank you, guys.
So on Magna, obviously, had a great bounce off the bottom in February, rallied from sort of $30 to $40, actually rallied to low 40s in US dollars. This is a company that obviously is dependent on sentiment around the auto cycle. I think that there were some investors who are concerned that the auto cycle might be running out of gas a little bit. I would say it's more likely that we saw sort of a mid-cycle slowdown and it's likely to reaccelerate. It's not the strongest company in the auto parts group and assembly group, although I think that it looks okay. We are bullish on consumer. We are bullish on the economic cycle. We think there's very little risk of recession. And we think it's likely that Europe starts to pick up, and Europe is important for Magna. So I'm going to talk about another company today that is a big supplier into auto as a top pick, which I might consider buying first. But I think that the Magna looks okay.
Okay, so I want to give you the consensus here. Well, there's 18 analysts in both the States and Canada, or for both stocks. And it looks like, I'm talking about the Canadian listing here, there's 12 buys, there's 6 holds. The average target in Canada is $69, and the stock's been trading, as you just saw, at around $53.
The one thing I would say, it trades at a discount to the group.
Oh, Magna does.
It does. It trades at about 80% of the multiple of the group. And has historically traded at a discount.
Why is that?
A little bit less well known, and the exposure to European markets is part of it.
Okay. Walter is standing by in Edmonton. Go ahead, Walter.
Yeah, good morning.
Good morning.
I'm interested in Canadian Western Bank, seeing they're exposed to the oil in Western Canada, and I see the other large banks had a fairly good run. Would you consider this a lagger and a buy? And thank you. I shall listen.
Okay.
Thank you very much.
So, I can only speak to it from our point of view. At Barometer, we try to understand the macro environment, and then from that find securities that fit into our view. And I think that our macro view is that while you're seeing a great bounce in energy, that structurally energy could be tough for a longer period of time because it's become more like mass manufacturing, and so the time to turn up production is very short today. At the security level, we don't ever like to buy something that appears to be broken, hoping that it's going to get fixed. We like to buy things that are good, but getting better. And so I would say I'd be more likely to buy something that's not so exposed to Western Canada right now. We don't really buy turnarounds. And frankly, we like to buy leaders as opposed to laggards. If you think that the cycle has room to go for the economy and for the market, you'd prefer to buy the companies that are firing on all cylinders to begin with. They likely will continue to. When you're a leader, you have easier time hiring the best employees, lower cost of capital. It's easier to stay the leader. So at this point, I'll leave that for other folks that may be value investors or those that try and buy turnarounds. But I'd prefer to own a TD or a Royal, or frankly in the US, a JP Morgan.
Mm-hmm. It's interesting, Canadian Western, they're up 11% this year. Royal Bank is only up 7%, but I guess oil prices have bounced.
Well, remembering that that the stock peaked at about 42 and dropped to about 19.
That's 26 now.
You know, so it's had a nice bounce, but again, it's like the oil stocks. They've all had a great bounce. The question is whether this is something that continues on or whether it's more of a retracement of the decline that's taken place.
And I mean, over 5 years, Canadian Western is actually down around 14%, whereas Royal is up more than 30%. Yeah. We're going to be right back with David Burrows. He's President and Chief Investment Strategist at Barometer Capital Management, taking your questions on North American large caps at 1-855-326-6266.